Hello, everybody, and welcome to today's Traders Mind Chat show. I'm your host, Mike Lamott, and today we are talking about knowing when to step on the gas. The market has been pretty hot as of late. We've been in this uptrend now for quite a while, and the question is, how do you know when to step on the gas? How do you know when to hit the brake? Well, over the past maybe 2 weeks, the market has pulled back. And in that time, a lot of the stocks that led the way started to pull back, and they started to pull back sharply. A struggle that a lot of traders have. And if this is you, type into the chat and let me know if you've ever struggled with this. Struggling between wanting to lock in gains, wanting to let trades run, and fearing giving back all of your profits. If that's you, raise your hand. And you can see right now that my hand is raised. Yeah, that's a real fear, especially for those of us that are trading part-time, that are trying to make some sort of a side income, trying to grow a nest egg. That's something that's going to be meaningful for us, right? It's not just like some pot of gold down the road. This is something that can really make an impact. And so with that kind of um, emotional tie to the reality of these goals, giving back profits is a real fear, especially when we sacrifice time, well, with family, with doing the other things that we'd rather be doing than sitting in front of the computer. It it's it's a real fear. And so that's one of the reasons why I think that it's important to address this question now of when and how to step on the gas. This question was actually brought up in our private Discord with our group coaching members, and the question was asked, well, how did I know when to start to step on the gas? Because I put on a couple of trades recently where I've taken them with size, I've bought them as they've broken out on trade alerts, right? And it's it takes a bit of finesse. So I thought that I would walk you guys through it. Please go ahead and ask as many questions as you want. I'm here and I want to help you. And by the way, go ahead and type into the chat now and just let me know where you're at, where you're from, and if any of this is interesting you so far. Just doing that, typing into the chat is something that helps bless this out to more people. So I really appreciate the engagement. So why don't we hop on over to the charts and take a look at some of what has helped me figure out, well, how do you know when to step on the gas? So here's what we're looking at. We're looking at 5 major indexes and an ETF, right? It sounds like a movie title. But basically, we've got the S&P 500, the NASDAQ, the Russell 2000, the New York Stock Exchange, and the Dow. And I'll see if we could do this just from a couple of days ago, right? Great, and it did it. So here's where we were just on Tuesday. And you can see how much the indexes pulled back, right? They all had a strong run up right after the election. And then what happened? They gave most of it back. And when the indexes give back, lots of stocks tend to give back too. And so people start jumping for joy, yippee yippee, that, yeah, you know what? I'm up huge right now. And then they see those profits fade and fade and fade. And in real time, conviction can sometimes fly out the window, and it has to do, well, with just seeing those profits evaporate, and the lack of conviction in a process or a system can be a contributor to it. So here is here's part of what helped me to step on the gas in this. Now, one of the things that I look at, well, when I'm breaking down markets and trades and trying to figure out if I should be heavy or light in the market, uh, a lot of it has to do with this diagram here. If you've never seen this before, this is how I define what I call the market's mood. And the market's mood is, well, is it time to be aggressive, or is it time to be very conservative, or perhaps in cash? Um, this is a concept that I discuss quite a bit in my book, The Trading Mind Wheel. So if you've never heard about it before, if you want to go deeper, you could go get this book, The Trading Mind Wheel. It's available on Amazon right now. But to kind of give you a brief overview of what this is, taking a look at the general market conditions, you start to assess, well, are you in a choppy environment? Are you in a downtrend? Are you in an uptrend? Is it basically a good overall environment for you to be buying stocks, selling stocks, or doing nothing? Right? That's what this quadrant over here is going to help you figure out. And well, the reason why I have three circles here and why I have them all intersecting in the middle is because basically your weakest link is going to be the thing that helps you figure out, okay, I should be playing a conservative game, or I should be going all out at this point. Now, there's a bunch of things that we could put in here. And there's a bunch of things that I personally like to put in here. But the actual stuff, right? Like it is less important than actually having these three ways to look at the market, because, well, when you're looking at the market in a three-dimensional context like this, it helps you to do a bunch of different things, right? Like, when it's tuning you into the market very, very well, because it's giving you multiple perspectives of the general market, and then taking a look at the stocks in your system. That's what this one's going to be about. Talk about that in a second. How your personal performance has been. If you are trading, you should be going after whatever you think are the best opportunities. Like, if you're just buying random stuff, then you'll have random results. But if you have a process that says this is the best opportunity in the market right now, and you go and you buy that, how that trade performs is going to give you really great insight into the general condition of the market. So to take a step back and say, well, how did I know to go into these trades here? Right. So here are some of the trades that I'm in right now. Excuse me. I've been long Tesla for a little while here. I got into Bros earlier this week. I bought Reddit yesterday, right at the open. I bought TNA yesterday, right at the open. I bought Carvana as it was breaking out earlier today. So, how did I know when to get into these trades? Well, I'll walk you through it, right? And how did I know to step on the gas on these trades? So, a few things that a few of the basics that you're going to need. The first basic that you're going to need is having your setups defined ahead of time. So what does that mean? That means that, okay, I know exactly what it is that I'm looking for. I know the if it's a chart pattern, you know exactly what that chart pattern looks like, what the criteria of that pattern is, when it's typically formed, what makes a good one versus a great one. You should probably have a few models of it, like actual real models, not just somebody hand drawing something and saying, find this wedge or this cup with handle or whatever it happens to be. Have real examples so that way when it shows up, you have some sort of way to measure, is this thing really a good one or is it not? uh, let's flip back over to these charts for a second. These are my open trades. These are stocks on my focus list coming into today, and some of them were pretty good, but not quite good enough to for me to go and actively trade. This right here is one of them, CXW. Now, you might be saying, well, you let me know what you think about this one, but this is a standard pullback and price started to break out. So far it's squatted. So you might say, well, what's wrong with this? Part of what's wrong with it is that it doesn't quite fit the criteria that I have for my trades. Right. So let's pull up. I thought I had the playbook up, but there's something that I do and something that I share with our members that I call my setups model book, and it is right in here. So part of what I do is I will define the setups for my trades and I'll figure out, well, what should a pullback buy look like? Um, does it fit all of the criteria here? Now, I'll let you know that the one that we were just looking at in CXW, it checks off a few of these boxes, but when I get over to this, the look and the character, pulls back into the 21-day exponential moving average. Did it do that? Well, no, right? It's actually pulling back into the 10-day exponential moving average. It's a pretty sharp decline too, right? It's a 67.81 degree decline. So that's more than what I typically like to see. And it's not that this can't work. Don't get me wrong, because perhaps it does. But we're not just interested in trading anything. We're interested in trading specific things because when we're able to execute the same thing over and over and over and over again, and that thing that we're executing actually has a high probability of success, and that doesn't mean that, oh, you're going to win 90% of trades. It means that if you trade this thing 100 times, you know for certain that you're coming out with more money in your pocket than what you started with. That's why. That's the real reason why you want to have something like this, where you have your criteria. And jumping ahead a little bit over here with that, but it's why you want to have your criteria set so that way you're able to go and execute very quickly. If you're trading part-time, if you're a busy person, if you don't have all day to sit in front of the screen, then having set criteria like this is part of what's going to help you to be very efficient. This is what I was using when I was trading part-time. I I actually still consider myself to be trading part-time, right? Because I'm doing live streams and I'm doing podcasts and I'm coaching people, building courses, all this kind of stuff. So am I only trading? Well, no, I'm doing all this other stuff that's related to trading, but you get the idea. I've been trading now for 25 years. I'm not just sitting in front of the screen all day long. Part of the reason why has to do with this. It has to do also with this. So let's come back over to these charts and talk a little bit about, well, what was so great about, say, Reddit yesterday, right? Because yesterday I bought Reddit right at the open. I had an alert set at $139.10. It actually gapped slightly above it. I bought right at the open. Now you might be saying, well, why buy right at the open? Why not wait a little bit? Well, I'll show you. First thing about this, why I chose not to wait, was because this was already one of those ultra high quality setups that met the criteria in that setups list that we just looked at for model setup. So it fit all of that. It fit the conditions for it, meaning that we're in a very bullish environment. This has been a leading stock for a very long time. The market conditions were ripe. And because this is a leading stock among its industry group in the market as well, that gave me additional conviction to say, yes, I will buy this here, right? Because I'm not trying to figure out all that stuff in the moment just because I see it moving. I come into the day with all that stuff already figured out. I come into the day, well, with here, let me show you the notes that I had on this. And so come over to this here, right? So here's Reddit. Here are the notes that I had. Reddit is consolidating near its highs. It found support at the 10 EMA and is close to breaking out to fresh highs again. I've set an alert at 139.10, and it was setting up in a power play. And I already have what a power play is and what the criteria that I look for. All the stuff that we just saw on the chart. So I like to write a brief note to myself, write exactly, okay, entry price or planned alert 139.10, where I'm setting my stop potentially 128.40, potential target 200, what I'm risking on this trade, potential reward of the trade, and then also figuring out, well, what kind of sizing would I go into this trade with? Well, I put 15% of my account in it, and I'm risking about 1% of my account, at least when the trade started out. So when the alert goes off, I could just take a look and see, well, is this something that I want to execute on? Do I want to make sure, do I want to execute this plan or not? And it makes it that easy because all the prep was done beforehand. All the knowledge was studied beforehand. It wasn't just here's some guy that's saying stuff on the internet and saying, "Yeah, well, let's this one looks good, let's go buy it." Because you can do that sometimes. You can just hear something somebody said on the internet, somebody that you respect, and then go out and buy it, and sometimes you'll have a good result. But are you able to hold it? Are you able to sell it properly? That's where the rubber meets the road, and for a lot of people, the rubber tends to go off the road and hit a tree because you don't have enough conviction in not even the stock, but in what you're doing. So with this, bought it yesterday at the open, um, sold a quarter of it towards the end of the day. I scaled out of 25% of the position up here at $156.80. I was up about 15%, I want to say, something like that. No, 12 and a half, right? A little bit better than 12 and a half. When price jumps up that much on day one, I like to take something off the table and get my initial capital risk, the difference between the where I entered and where my stop loss was. I like to get that off the table so that way I get to play with the house's money. That gives me a lot more flexibility to step on the gas even more, right? We're talking about stepping on the gas here. This is how you start to step on the gas. When you have profits, you lock those profits in. You get your initial capital risk off the table. Now that gives you so much more flexibility for the next trade where you could keep on executing with more conviction. And when you see things starting to work fairly quickly, that's something else that's going to tell you about the current market environment because the market tends to move in waves. And when you get a bunch of trades that are working at the same time, so some work today, some work tomorrow, some work the day after that, that's telling you, oh, the market's gaining steam. Great, let's put some money to work here. And that's exactly what I did with these trades. From just the other day, I was pretty heavily invested when the market started to sell off back here. I got fairly light in a hurry. I At one point I was down to maybe about 10 or 15% invested. As of now, with the addition of Carvana, I want to say that I'm back to being about 85% invested. So you can ramp up fairly quickly while still risking just a tiny, tiny bit. Um, Questions. See, Tomoto uh, posted something in there. Just that will. Thank you for the. I think that he was trying to goose the algorithm. So thank you, Tomato. Um, Caleb says that he's seen this a couple of times. Caleb is one of our uh, group coaching members. And by the way, we're doing a little bit of a rebrand of the group coaching. I decided to rename it instead of just calling it group coaching, instead of calling it premium. It's not quite as good as calling it the Mara Trading Accelerator. So basically, what you're getting in this Mara Trading Accelerator is you get to work with me, work with our team, and you get coaching all throughout the day. We have a private Discord group. You get weekly lessons. You get uh, access to me. You get a live group coaching call over on Google Meet, and all the microphones are open. You could turn your video on. We could have a conversation face to face, and we could have a real dialogue on how you could help to level up your trading. And this has helped a lot of people. It's what's helped me go from struggling beginner way back in 2013 when I was starting my journey. That's me right here. I'm getting my workbook signed by Charles Harris. He was one of William O'Neill's portfolio managers. William O'Neill passed away, I believe it was last year, I believe. God rest his soul. But go back to 2013, I was just studying and learning everything that I could from Charles and from people like him. I met Mark Minervini soon thereafter. And then just a few years later, in 2018, ended up uh, learning enough to where I was consistently profitable and was already helping a lot of people part time. And I was invited to be on NASDAQ TV, and that's a screenshot of me on that show telling people how anyone can succeed in trading with the right systems and the right levels of support. So if this Mara Trading Accelerator is something that you're interested in, I want to post the link in here, and I want to give you a special offer because Black Friday is here, and tis the season, right? So what I want to offer you is 50% off your first month of the Mara Trading Accelerator program. 50% off so that way you could come in, You could try it out, see if it's right for you, get the real kind of results that a lot of people here are having, and come check it out. For those of you that want to upgrade and are already in the program, maybe you want to sign up for a year, what I'm going to throw in are two one-on-one coaching calls. Now, the one-on-one coaching calls is something that we normally just reserve for VIP level. It's like the next level up from the Mara Trading Accelerator program. But I'm going to throw in two 30-minute one-on-one calls that you could use at any time, and that will come uh, with the annual membership. So for those of you that are interested in that, go check out the Mara Trading Accelerator program, and I hope to see you in there. So let's switch gears and answer some questions. Let me know what questions you guys have. Some questions about the buy in TNA. All right, so let's take a look at that one in TNA. So here's TNA. Uh, TNA is an ETF that mirrors the Russell 2000, but it also trades at 3 times the Russell 2000. So whatever the Russell 2000 does, this moves 3 times that. So it gives you the stability of an index with the leverage and the extra mojo of a stock. And so when I see this pulling back and consolidating just how it did over here around the 50-day moving average, and I'm factoring in, well, what's happening to the rest of the indexes, and how does the rest of the market mood look? That's part of what's helping me discern, is this a high probability setup? I saw it as yes. I saw it as, wow, I could get in way down here, right at around the 50-day moving average, as this thing is getting set up to rebound, and just risk 6%. The difference between my entry and my stop is just 6% for upside that could get me at least twice my risk, right? And we're already almost there, but I'm looking for upside that could go much higher than that. If we could get up to the recent high over here, we're looking at almost 3 times the risk. If we could break out and get to new highs, right? Because we are almost there. At least if we pull up the Russell, right? Here's the Russell. We're almost at new highs. So if this thing can break out and go, well, this could turn out to be a 5R trade, 6R trade, something that nets us maybe 30%, 40%. And that's just on trading an ETF that mirrors an index. This is the kind of leverage that you want to have. And this is the kind of asymmetric risk that lets me take losses, right? Like my batting average in trading is maybe about 50%, give or take. Sometimes it's a little bit more, sometimes it's a little bit less, but as a whole, it's roughly 50%. So I'm winning just as much as what I'm losing, but as often as what I'm losing, I should say. But the big difference is that my losses are this small and my wins can sometimes be this big, right? How TNA is moving, how Tesla is moving, how Reddit is moving. And this is the second time I'm trading Reddit. My first buy in Reddit was way down here, and I held it for the bulk of this and just re-entered. That's how you can make significant money in trading. It has to do a lot with patience. It has to do a lot with knowing what you're doing. The reason why I wrote this book here, The Trading Mind Wheel, is so that way you could learn what you need to do because there's so many fantastic books out there. You need something that teaches you the skills required for trading, not just the system, not just the strategy, but the actual skills that you need. So that way you could take the stuff that you're learning from everywhere and actually put it to work. It's like if you went to the gym, you could go to the gym and you could read what to do on the different machines and start to figure it out. That this is like having a personal trainer, right? That's telling you, okay, here's how you do this and why and what it's going to target. That's why if you haven't read the Trading Mind Wheel yet, you need to pick up a copy of the Trading Mind Wheel. Things that like journaling, back testing, right? Like I didn't really know anything about back testing when I even after studying O'Neill, I still didn't get it. Even after studying Mark Minervini, I still didn't get back testing. He called it factor modeling. That's when things started to click a little bit, but like how to actually do that, how post analysis factors into that stuff, what kinds of things to look at and tweak. A lot of this stuff was stuff that I figured out on my own and from different people along the way. So just taking all of that, putting it into a book that you could sit down and read in an afternoon, or maybe if you're a slower reader like I am, maybe it takes you a few days to get through it. But this is significantly going to help you. So if you haven't read the Trading Mind Wheel yet, go get yourself a copy. Question from Caleb. Those coaching calls are in the current monthly one or only the annual? It's only in the annual. It's only in the annual. So if you wanted to upgrade to the annual billing, or if somebody's coming in that's brand new and they want to sign up for a year, the offer right now for the Black Friday is I'll throw in those two 30-minute coaching calls that you could use whenever you want to use them, and we could discuss whatever you'd like to discuss. Let's see. Well, what other questions do you guys have? Question about Reddit. All right, so let's go back to Reddit. And question is, how did I have the conviction to sit through this pullback? Because yesterday it's up almost 16% on the day. Today, at one point, it was down, I want to say close to 9 or maybe even 10%. Yeah, at its worst, it was down 10%. That you know what? Honestly, that's the kind of move that used to freak me out, right? Because you'd be up big, and then you wake up the next morning, prices gapping down. Oh, I'm about to round trip this stock, and I would be selling the whole thing. And what inevitably happens when you do that? Those of you that have traded for any amount of time, you know the answer. It tends to rally right in your face. So is that the reason why I decided to hold? No, no. Right? It's not an emotional thing. The reason why, and part of what allowed me to sit and hold and not be freaked out by this move, part of it has to do with having sold some into strength yesterday. A lot of people have trouble selling into strength. I did too. It's a habit that you need to start to build, right? The way to do it, just force yourself to do it. Just pick start out by picking a spot where you'll start to scale out into strength. Eventually, you'll start to gain a little bit of a feel of when and how to do it. One of the ways that I like to do it is to see, all right, well, how much am I up on the trade? And how is that relative to my other trades, right? Because if stocks are moving in waves, then if they're on this big wave where everything's running pretty far, pretty fast, then this might be normal action. Also, what might be normal action are seeing sharp pullbacks. That's something else that had me thinking, yeah, you know what? I think that this is ultimately going to go a lot higher, but discipline says take something off the table. So I took something off the table. Now, I don't feel like a dope if I do get stopped out completely because at least I sold something, right? At least I locked in something. So price pulled back and I'm not sweating it. Now, at the end of the day, question might be, well, do you sell? Do you hold? What do you do? Here's another thing that I talk about also in the trading mind wheel. It's danger signals. Now, I met this guy named Brandon Shapiro. He is on X. I believe his handle on X is AMP Trading. And he's a coder for TradingView. I got to talking with him and asked him, I've got this whole trade management chapter in the trading mind wheel. Do you think that you could code some of these danger signals that I have that show up at different times? And he's like, yeah, that's actually a fun idea. Let's try to do it. So we worked together for maybe about a month and a half, maybe 2 months. And one of the things that he was able to do, like he was able to code all the danger signals. And just to flip through a couple of charts here, right? So Redson, um, if we take a look at this, yeah, there's just one danger signal there. Most of them aren't going to have many because many of them are up on the day. This one has two. Uh, let's see how many this one has. This one has two. Tesla, what did Tesla have? Three. But you could also go back in time and see when things started to get hairy, right? So this is going to tell me, oh, on that day, there were 9 danger signals on this thing. So depending on where you're at in a trade, you might decide to hold with 9 danger signals. You might decide to sell because there's all these things. All the indicator is doing is just telling you what's up. It's still up to us to decide, well, how are we going to respond? I talk about how I respond in the trading mind wheel, but I also talk about how I respond and help people and walk people through in the group coaching program in the in the Mara Trading Accelerator. It's going to take me a little bit of time to uh, get used to the new branding, but yeah, the Trading Accelerator is where we have these kinds of conversations and people are able to ask specifics and not just about the stocks that I'm trading, but about the stocks that they're trading, how to craft a system that's going to fit them. Because it's one thing to see somebody else doing this stuff, it's another thing to do it yourself and start to customize. And that process, that customization process, that's something that I started to do when it was after reading the books, it was after attending the courses. It started to happen more so when I was around other people and I started to see, well, here's how this guy does this and here's how that guy does that, and just starting to figure it out. Well, wouldn't it be great if there were a program where you could talk to somebody that has a lot of experience, that has a lot of success, that's helped other people, and you could bounce your ideas off of them. You could get feedback. You could get maybe some of the courses that are in there, uh, things that are relatively short, things that are 30-minute increments, things that are digestible, things that you could study for the week and then bring your questions to a weekly insight hour. Well, guess what? That's what the Mara Trading Accelerator is all about. So come on in, sign up, check it out. We've got even more people hopping onto the live stream, so welcome everybody. If you missed earlier, we just posted about the Mara Trading Accelerator and all the cool stuff that it includes. So I'll post the link in there again, and there is a coupon code to get 50% off 50% off your first month. And I just posted the code in the chat. The code is Black Friday 50. and it's for a limited time only. We're doing it through a Cyber Monday, so whatever that date is from now until then, go check out the program. All righty. Anything else? Any other final thoughts or questions or comments on anything here? I think that it's important for us to recognize when to step on the gas in our trades. I think that a common myth about trading is that you could have consistent returns. Now, you could trade consistently, but the market moves in waves and cycles. So it's important to not necessarily expect, oh, I'm going to make X amount of dollars every single month in profits, and that's what I'm going to get. Well, what's more is knowing when to step on the gas and be able to accelerate. And when you are in a very strong market, to be able to take advantage of it. And by doing that, you're really able to weather the not so good times in the market, because when you know what you're doing and you're able to really press when things are working and you're able to rack up those gains when the market goes sideways, when the market starts to go down, when it's not a good time for your system, it doesn't matter so much. You're not starving for a trade because you've already made your profits in the good times, and you hopefully have stored up enough nuts for winter that you're able to sit through and not worry. And the secret is that, yeah, like you want to have uh, consistent gains in the market where you're able to say almost draw a salary from the market. Well, that's how you do it. You don't just make $1,000 every single week or every single month or whatever it is that you're hoping to do. You step on the gas, make your big profits, store them all up, and then you could budget yourself. Well, okay, I'll take out a little bit here, a little bit there. Or maybe you set it up for yourself where you pull out a certain percentage from your account, you keep it in, say, a separate savings account, and then you can pay yourself off of that. Right? And that's how you can start to get the market to pay you and pay you in a regular way. But it all starts out with knowing what you're doing, and that's why we've built all these programs. That's why we've written these books, and it's why I hope to see you in the program. Alrighty. Everybody, I hope that you enjoyed this, and I will see you actually, I'll see you guys on Monday. Monday, we are having the Trading Truths podcast. We are interviewing, I'm going to mess up the pronunciation of the name, but I want to say that it's John Pacaroba. Dennis and I will be interviewing him on the Trading Truths podcast, so I hope to see you there. And if not, then I hope that you have a wonderful, safe, and blessed Thanksgiving holiday. Take care, much love, and as always, God bless.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.